Good morning to my 21 subscribers. I hope you're all doing well. Today I'm going to do a quick video on Arista Networks, which just dropped around 12% after earnings this morning. Now, I've been holding the stock since it was about $100. I know a lot of you will be wondering what happened. Is it now time to buy the dip, or is this the start of something bigger? So the real question is, I bought it at $100. Would I buy again today? Arista is basically the plumbing behind the cloud and AI boom. They build ultra high speed Ethernet switches and routers, stuff that connects thousands of GPUs inside an AI supercomputer. Their customers are Meta, Microsoft, and OpenAI. They even have, testimonies from different founders talking about how great their products are. So what caused this bad news? Ironically, it's not bad results. In fact, the company actually beat expectations. Revenues came in at $231 billion, up 27.5% year on year, and earnings per share at 75%, which beat estimates too. Margins were still elite, gross margins above 65% and operating margins above 48%. But the issue here was actually guidance. For the next quarter, management projected flat sequential growth, roughly 2.3 to 2.4 billion in revenue. That's basically saying we're pausing after a huge run. And when your stock is trading over 55x earnings, that pause feels expensive. So I bought Arista at around $100, and today it's still hovering around that heavy support at $135 or so. Would I buy it again at these levels? Honestly, yes, but with patience. Here's why. They're still dominating AI data center networking, a market that's just beginning. They have no debt and more than 10 billion in cash. Honestly, yes, but with patience. And here's why. They're still dominating AI data center networking. They have no debt and more than $10 billion in cash. The gross margins are at 60%, which are unheard of in hardware basically. And they're still growing revenues at 25% plus versus Cisco at 5%. You can actually see a really interesting slide they have in their presentation here, which shows of them taking market share away from Cisco here as well. So long term, in my opinion, Arista is positioned pretty well. But in the short term, the valuation looks relatively rich. At 55 times earnings, you can't expect smooth sailing here. And if I was building a new position, I'd do it slowly and maybe start scaling in here. So Arista's drop isn't about fundamentals collapsing, it's about expectations. The business is still world-class, margins are strong, and AI demand isn't slowing. I mean, for long-term investors, it might actually be a healthy reset. I'd be really interested to hear what you guys think. Are you going to buy the dip or wait it out? Drop your thoughts below, and don't forget to subscribe for more honest takes from an actual investor.